Hello and welcome back on The Cave. My name is Elias and today we will go over some interesting topics regarding the Federal Reserve. Why it's interesting and why you should definitely be aware of what they're doing. So before we get into it, today we will again talk over some financial topics, and as always guys, do not make financial decisions based on my opinions and my informations. Do your own research, and as always, let's get into it. So today was a long day, so I will definitely keep it short. Today, the Federal Reserve, did another interest rate rise. So what does that mean and why is that even important for us, and why is the asset markets just pumping instantly after they announced that they will raise the interest rates by 0.25%, so 25 basis points. So why do we even have to raise the interest rates, and what are the interest rates even? Just a real quick brief. So as you probably heard, we had a pandemic going on, and a pandemic is quite expensive. So what we can do as a since we have a centralized party managing our money supplies, we can just turn the printer on. So we just print more money. That's how easy it is. So the Fed exactly did this. So we had to do it because we need more money. We need to pay everything. People can't work, shops are closed, and what should we do? We just print more money. So what we did is print more money, and it was actually that easy, and obviously that can't sustain for too long. So that's why we have to raise now interest rates. So just that you know that what we're talking about, or what kind of numbers we're talking about so much money. So as you can see, here is the money supply of the US. So we had, we started here already. That was like 2.8, I think. We started already with a massive hike up there. This is the money supply, by the way, not the interest rates. We dropped down, went into neutral territory again. And then 2020, end of 2020 and starting of 2021, we started a massive pump, obviously, because the pandemic was hitting, everything closed down and so on. We needed a lot of money. And if we look at the inflation rate, as you can see here, and just a real quick intro for those who probably don't know it, inflation is when more money comes into the system, so more money gets printed, then gets basically burned. Literally burned, goes out of the system. So every day basically more money gets into the system and can be used in the system itself. So technically the money should lose value. So as you can see here, the inflation rate always tumbled around like 1, 2, sometimes a bit up, then down again, and so on. And now we just made a huge spike 2021 up to 9%. So that's super high. If we quickly look at it, what the inflation rate or the Swiss franc is. So as you can see here, the Swiss franc currently, I think, is it? Yeah, the Swiss franc currently is at 3%. So that's super stable. Exactly. And as you can see, we have to go down, and that's why we have to raise the interest rates. So what does it mean, raising interest rates? And why is that so important? And why are the financial markets so dependent or so volatile on these events? So what we're doing with the interest rate hikes is we're raising fees of basically borrowing money. So if you want to go ahead and buy a new house or buy a new car or buy whatever, and you need a loan from a bank, it gets more and more expensive. So when interests are low, what happened is money gets basically cheap. So you can get easily to a big sum of money without paying a lot of interest rates. So you can buy a house, buy a car, and so on. You can afford it, obviously, because you can afford paying these interest rates. But the higher the interest rates go, the lower is the amount of people which are willing to pay these fees. So the less money gets borrowed out to just random people, which can inflate the market. So that obviously sustains, or better said, helps to reduce inflation. So So the interest rate goes up, so it's not so lucrative anymore to borrow money to buy stuff. So less money gets into the system, and this is basically how they want to reduce the money supply. And obviously, as you can see, it works, and it was quite drastically, and that was also kind of a reason. I mean, when we look at the times of cheap money, it's easy to take out a loan and throw it into assets like Bitcoin, like stocks, like everything. And the lower the interest rates obviously are, the higher the chance that people will take out loans again or take out money again, because the money is cheap again, and put it into other asset classes like Bitcoin and so on. So that's basically a bullish sign, and that's also why you can see here on that these are the hourly charts, a big volume coming in here. But we have to be careful, because these events are always also used by market makers to just get people into longs or get people into shorts, if it would be the opposite scenario, and liquidate them. So yeah, please be very aware of this and be very cautious also in these kind of segments. So yeah, don't rush into trades. That's never a good idea. All right, this was actually already it from today's video. I thought it's actually quite important to talk about these topics too, just general financial market topics. And I mean, the Fed is all over Twitter at the moment, and I really hope that I were able to give you some insights in what's happening out there and why the markets are moving up at the moment, or are possibly moving down on another day. That's the whole point of this channel. And with that being said, if you liked the video, please consider dropping a like. It would really support the channel a lot. If you like to see more of these content pieces, then yeah, please consider to follow this channel. And with that being said, I wish you a very nice day, and see you soon.